Hi traders, welcome to this video. Today I want to share with you some thoughts and some observations in the current market situation. And I also want to go with you through my portfolio or through my portfolio before I sold the most positions. So just a quick look at the market here. So this is the Triple Q ETF, which is similar to the NASDAQ 100. And on the left side is the weekly chart, on the right side is the daily chart. And what you can see in the weekly chart here is that we are still in an uptrend here. So from my interpretation, you can see that the lows of the trend are still upward. So we have higher highs in place and we have higher lows. So we are definitely in an uptrend, but the uptrend is under pressure and the uptrend is in danger. And if we look at the daily chart here on the right side, you can see that now the NASDAQ 100 trades below this red line, and this red line is the exponential moving average 65, which I use as a midterm moving average or trend indicator. And what you can see is that yesterday the ETF broke below this line on very big volume. You can see here the volume bars also in the last days are very strong. And that's always a bad sign. And of course, I do not look at the QQQ alone or at the NASDAQ 100 alone. I also look at the S&P 500, which is holding up much better, and also at the Russell 2000, which is also holding up much better. And I also look at other technical or technology ETFs. So for example, like ARK, Innovation, and this observation of different indices that leads to my opinion about the market, or that confirms my observations, what I see in the single stocks in my watch list and portfolio. So right now we are in a correction in the daily chart. You can see that in the daily chart itself, we now broke below this last low here. And with that, we have a new lower low. And you can see the high here from February the 16th. Then you can see here a lower high from March the 2nd, and now we are on the way to new lows. And of course, everybody is asking where will the index find support, or where we can get back into the market. And that's not the right question in my view. So because you don't want to predict anything, what you want to do is you want to react to price information, react in real time to price information. When you see a correction in the markets, you have to react to that. And this is by becoming defensive, or getting more defensive in your portfolio and your stock selection. But when you combine both views, so the weekly chart and also the daily chart, you can come to the conclusion that this is just something like a pullback or a correction in a major uptrend. And then, of course, you can see and you can look for natural support levels, or very obviously support levels. And when you look at the QQQs, you can see that something around 300. So I'll remove the drawings here. Something around this 300 level seems very natural. So, there is a big previous resistance level, and also this black line, which is the EMA 40 or the EMA 200 in the daily chart, that will also go up here, and maybe this is something where an index can find support in the next weeks. And as long as we're trading above the EMA 200, so I added the EMA 200 here to the chart. As long as we trade above the EMA 200, this is clear a bull market for me, and we are far away from a bear market here in my analysis. But it is a correction, and we have to take correction seriously, because in a correction the odds are against us as a trend follower. So because the trend is currently not up, it's currently down, and I'm trading the daily chart, so, and not the weekly chart itself. So I'm more a mid-term trader and hold position for weeks and sometimes months when the market is right and works for me. But in that situation, I expect a correction, or at least a consolidation over multiple weeks, something like that here. So and sideways consolidation or correction which lasts longer than 2 months. So in that 2 months, the odds are absolute against me. And I see that, of course, in my portfolio, because I get stopped out of a lot of positions. And when I see that, so that every test position I put on gets stopped out, I become more and more defensive. I wrote about that in my last free newsletter, that I'm currently in a drawdown situation, and being in a drawdown as a trend follower is normal. So it's nothing special, because of course when you sell your stocks into weakness, so when you sell your stocks when they start to correct, that also means you give back profits to the market. And in that situation you are in a drawdown. And the thing is, what you want to make sure is, when you are sitting in a hole, that you do not dig deeper. So that means that when you are in a drawdown, do everything that the drawdown will not become a larger drawdown. And I know that is very difficult, because on the one side you have to trade to make money, on the other side you have to protect your capital, and you have to be aggressive and you have to be defensive at the right time, and sometimes at the same time. But the thing is, when a market is in a correction like we have here currently, and also showing something like a top pattern, so a head and shoulders pattern, what I see here, that means the odds are much higher that we see a correction in the next days and in the next weeks, instead that we are going higher directly from here. And in that situation, you really want to become defensive, because the direction of the stock market, and the most stocks follow the direction of the general market, is on the short side, or is downwards and not upwards. And I trade mostly the upward side, so the long side. And when we look at my last portfolio here, I posted that on Twitter some days. So I owned MEG, I owned PLL, DKNG, small crypto trust here, and Wayfarer. And I bought them when the index, when the NASDAQ approached this 65 level. So, and when the market starts to move up here, so, and in the first rally attempts, that was a situation when the most of those stocks started to break out. But, so this is just the first rally attempt in the market, but that failed. And with that first rally attempt, also the best stocks which are holding up super good and are very strong from the relative strength perspective, they also fail. Because in that situation, investors and institutions, they are not looking at, okay, what should we hold and what should we sell? In that situation, they reduce their exposure to the market and they sell a portion or a part of their position of the whole portfolio. So of course, they are also selling the best stocks which are holding up the best. And that is why also stocks like DKNG will feel pressure here when the market is falling through to the downside. So in that situation, when the market is doing a first rally attempt, that's okay to buy test positions, so very small ones, so just 5% or 7.5%. But you must be very, very quick to sell them as soon as they start to correct. And let's look at a few of them I owned. MEG, so Montrose Environmental Group, I highlighted that in my free newsletter or on Twitter, I'm not sure about that. I entered the stock here, so on the breakout, and I sold that yesterday when the market came under pressure. And why did I sold the stock? So it's looking great here, so it's still looking very good. Why did I do that? Well, because of my drawdown situation currently. I don't want to risk more capital as needed. And when I see a stock like Montrose Environmental is holding up very good, and I'm personally not so convinced of that trade here, then I get out break even. And I'm able to buy that back at any time later. But capital protection in that situation is much more important for me than making gains. Because again, the odds are against me. So it is very likely that a stock like MEG also follow through to the downside when the market is falling through on the downside too. And when I can get out here at break even, and I also see that other stocks are correcting, like we saw yesterday here, I sold such a position at break even so that I do not risk more capital. I also sold out my PLL position, so a stock where I'm personally really convinced of, so very nice one. They had a contract also with Tesla, so I see a lot of potential here, but also the best stocks are going down with the market, and you cannot avoid that. You can see that yesterday here, this big outside reversal. So I bought the stock here, then I got shaken out a little bit and bought that back here on that day, and then I sold everything yesterday, and with the profits of the PLL position, I refinanced my losses of the other ones, so that I'm able to hold my capital at break even, so that I do not have a loss. And that's also some thoughts about portfolio management and also trading, that you say, okay, in that current situation when the odds are against me, I want to protect my capital, and that also means to take profits, to refinance losses, so that you are able to hold your equity curve, so that it will not go down deeper. And of course, that signal yesterday was a very bad signal here with this outside reversal. And my observation was that this outside reversal also happened in other stocks. We saw that here with DraftKings. I entered the position here on this breakout, so very nice, super good volume here, so perfect trade. And and yesterday we saw this outside reversal here, and I sold the position break even, so that I get out at break even. I think I get out here at 65.70, so I sold the stock at break even because I don't want to risk more capital. And I can easily get back into the stock when the market, or when the pressure in the market eases, and on the other side, the stock follows through to the upside. So we can see in pre-market it's up 4% here, which is very nice. But on the other side, the odds are still against me, and I don't want to risk more capital. So that's why I also sell a position or a stock where I'm convinced of, to protect my capital here. And the only position I owned is this Grayscale Digital Large Cap Fund. So that's a trust which is investing which invests into digital currencies, so like Bitcoin, Litecoin, Ethereum. And I have a very small position in that stock, so it's only 5% of my capital is invested. It's a pullback trade here and it's falling true to the upside. And as long as Bitcoin and Litecoin, etc., as long as they go up, I will hold the position, but also protect my break-even point here. So I bought that. I'm not 100% sure, but something like the high of this small day here. So something like 35.55. So, and this is something I protect, so that the position will not show me a loss. And I also got stopped out here of Wayfarer, which was also a trade where I was really convinced of. So I bought that here on this big breakout day, and it failed immediately. And this is, when you have a stock and it's technically strong and you see a lot of potential in the stock and also the growth, so sales growth and also EPS in that case are looking very good, and it failed immediately, then something is wrong in the market. And in that case, you can see the market is falling through on the downside. And that also leads to pressure on the best stocks you can find in the market. I also I wrote that on Twitter. I also traded a very small position here in Village Farms because I see the cannabis theme is not over, in my opinion. And I bought a very small position here. I added during the day a little bit to that. And start selling immediately after the position reversed here. I think the stock went up 1 hour and then immediately reversed. And that was a sign for me that I was wrong and sold out the position very quickly to realize a very small loss. And so that was my trading action in the last week. And for me, the most important point is at the moment really to protect my precious capital, so that I'm able, when the markets are, when they turn up into an uptrend again, so that I'm able to buy stocks and do not have a very, very deep drawdown in that situation. So, and the thing is, I want to make sure that I can hold overall my equity curve at the same level and be able to trade or test some positions. And in that case, it's not about making big gains or something. It's really more about being early in the stock market, trying out, testing how the market is working, what the market which stocks are in favor of the market and if the leaders are falling through or not. It's really about testing. It's not about being aggressive and try to make as much as possible money or profits. No, it's really about testing. So, and overall, for me, it's important that I'm flat here and not risking a lot of money. I want to say something about value stocks at the moment, because if we are looking at the IWN, which represents the value stocks here, you can see that this index is outperforming since November here. And that was also something I wrote in my free newsletter. You can see that the RS line from the IWN is up, and you can see that the uptrend is very steep and that the price is very close to new highs here. So value stocks are leading at the moment. And value stocks, when you look at the sectors which are currently leading, of course you can find something like finance. So when you look at an ETF like XLF, for example, it's leading here. Then other stocks like oil stocks. So when we look here at oil service stocks, they are leading to the upside. So they are very close to their highs. And and also other cyclical stocks, so like steel and some other sectors. I have a big list here of sector ETFs, and then you can see here when you go through the sectors which were in the green yesterday. So you can see here oil and mining stocks. This is also energy. Then here is steel, for example. Then another oil and gas. Then here KRE is finance. XLF is finance, and I have here DBC, that's commodities. So a lot of things. Insurance is coming up, industrials here, and so on. And these are all stocks which are either cyclical stocks or they are more or less value stocks. So like also banks, for example, in the finance direction. And the thing is, when I discuss with traders, or when traders wrote emails or Twitter messages to me, they always ask, why don't you switch from growth to value? And when I look back at the IWM, in hindsight, that looks absolutely right. You know, when I had switched to value stocks here in November, I had made good money here during the uptrend. Because if you look at the growth stocks, which is the IWO, you can see also that they were in a great trend, but they topped here. So they produce a topping pattern here, so a head and shoulders pattern, and started to underperform, I would say, since January. So in this region here, they started to underperform. And of course, if you look in hindsight at value versus growth, it makes sense and it looks very easy to switch. But the reality and live trading is something completely different. There is no 1 or 0 situation that you switch from growth to value and back. This is not possible because you have a situation or a phase over weeks and months where both are working great. And this is the situation where the money flows from growth into value. And it's very difficult to identify. And the thing is, I made the most of my performance in the last months between November and mid of February. I made really a killing here in this uptrend. And with me also other traders. And the thing is that would I have bought all the value stocks, I would not have bought the growth stocks I was trading in the recent weeks and months. So that means I was very successful here during this period when also value outperforms, and when it's obvious for everyone. So when everyone sees that value stocks and cyclicals are outperforming the market, then it's too late. Because if you now look at a lot of finance stocks, at a lot of oil stocks, steel stocks, whatever, they are already broken out and they are already 20 or 30% above their basis where they broke out in November. So there is not the point where you can switch from one style to another. So it's really more something that you stick there are only two possibilities. The first one is you stick to your style and you focus on your style. Then you have to wait until your style is back in favor. Or you have to trade both at the same time. So that means you must trade value stocks and growth stocks at the same time. And then you can see which one performs better. But in that situation, you have a reduced performance because you're trading underperformer and outperformer at the same time. And for me personally, and this is just my personal style or my personal, my approach, which is suited to my personality, I don't trade all those value and cyclical stocks because I build up a lot of experience and a lot of research and testing and adjusting my trading approach to growth stocks. When I personally would trade a value stock, I would not have the same conviction in the stock as when I trade a growth stock. You know, sometimes in value stocks, there is not the sales growth I want to see. So they have maybe EPS, very good EPS growth, but not in the same dimension I want to see. They do not have the same followership from funds, for example. I want to see. They have no interesting stories where I can build up or where I can see potential. So, and you know, they are different from the background, and that when I trade those stocks, I do not have the conviction in the stocks, and that leads to the situation that I sell them much earlier, that I get stopped out because I'm not willing to give the stocks so much room. And for me, it's much better to wait on the sidelines until growth is coming back, and then buy the right stocks at the right time. What I did here in 2020. So, and if you compare here, the IWO here, so the growth index with a value index, and you look back, you can see that the value index broke out very, very late. So it broke out to a new high here in January 2021. So, and the growth index broke out here much earlier in October to a new all-time high. So that means growth is still stronger, but in a correction at the moment. And from my experience and from my research, growth will always come back. So you don't have to be afraid that growth will not come back anymore or something like that. You know, the stock market is always driven higher, or will be always driven higher by new companies, by innovative and disruptive new products and services. And you don't find them in value or cyclical stocks. You know, they are the boring stocks. And growth stocks are always the more exciting ones with new products and new services. And from my own research, growth is also outperforming value in the long term. If you read my newsletters and if you also listen to my YouTube videos, you know that I'm also trading momentum stocks. So when we look, for example, at my Afria trade here, yes, Afria also had the fundamentals and the growth I want to see, but it was more a momentum trade. And the thing is, I have no problem to trade cyclicals and also value stocks when they show this type of momentum, because in that situation I can easily trade them by technicals alone. So I don't have to look at the fundamental side or at the story side. So I can trade them by fundamentals alone. And the thing is that I do not see this behavior currently in the most cyclical and value stocks. So I don't see, for example, I don't see this fear of missing out price action in the material stocks. So normally, oil and also gold and gas stocks and whatever, they can develop such a momentum to the upside if there is not enough speculative sentiment and if there is enough fear of missing out buying power. But at the moment, I don't see that. But as soon as I can see that in the cyclical stocks, then I will be able to trade them by price action alone. So, but as long as I don't see that, I will be very, very defensive and more in cash and wait until the stocks are coming back. And if we look, and I will present some of them in the free newsletter, if we look at stocks like DraftKings here, for example, they are trading on a new all-time high here. So this is a growth stocks which shows a very, very strong relative strength. And the same is true if you look at Wayfarer, for example, or even other China stocks which are coming up in my screeners. So like Bilibili, for example, which is trading very close to the all-time highs, or Joy comes into my mind, etc. And these are the stocks I'm observing right now. So what are the strong stocks when the market corrects? And these stocks have a very high potential to become new leaders in the next market, especially if I see something like a theme in the market, like for example here Joy and also Bilibili, and also if we look at Daco, for example, these are all China stocks. So maybe this is one another theme. For the last part of this video, I also want to say something about the situation here, which is discussed on social media and also in the trading and finance community, about this rise in the government bonds in the US, and not only in the US, also here in Germany where I live. The thing is, I'm not a macro trader, so I'm not a trader which looks at the yields every day and interpret them and find some clues for my own trading here. So I'm not that type of guy. So, and when I realized that there is something changing in the bond market or something, I realized it because it's discussed in the finance press, or because other people are talking on social media about that. So I do not look at the situation so much, because the stock market itself, when I look at the indices and when I look at the watch list and when I look at my screeners and portfolio, they give me enough clues for my own trading. So I don't have to monitor all the bond markets and yields, although I have them on my main watch list here, but I don't monitor and interpret them the whole day. So, and for me, it's not that important what is the bond market doing right now. It's much more important what the stock market is doing, because I'm not a bond trader. I'm not a macro trader. I'm a stock trader. So, and I focus on the stock market itself, and the stock market also reflects the development in the other markets, which are correlated or which have impact on the stock market itself. Okay, I hope that this video helped you a little bit to understand the current situation and what I am doing and what are my thoughts about that. So for me, it's very clear to be defensive as much as possible, but also look for the next potential leaders, and also to avoid that I'm now becoming a cyclical or value trader, because I'm convinced, and that shows my own research, that I perform much better when I focus on one style instead of trying to trade everything. Okay, so you can follow me, of course, in YouTube. So if you like the video, give it a thumbs up. If you don't like it, give it a thumbs down. You can write comments if you have questions, or follow me on Twitter, Facebook, and Instagram. But I personally always recommend to subscribe to my free newsletter. So I will send it out every Sunday with some trading tips and 3 stocks from my personal watch list.